Jared, I expect a recession to start in the US in late Q2, so let's say late June.
This morning, there was a new concern about the status of the debt ceiling negotiations in Washington with just a week to go before the debt ceiling deadline.
The two bank failures are the worst since the 2008 global financial crisis, and they have taken their toll on the markets.
Surely you have heard everywhere that the United States is entering a new crisis. And precisely the crises are the best time to generate wealth. Right now could be one of the easiest times to increase your net worth if you know how to use the crisis to your advantage. There is a popular saying that great riches are made in recessions, and you don't need to be a genius to realize that we are already starting one right now. News like the 91% of CEOs are preparing for a recession, 97% of corporate CFOs are cutting costs by 10%, or the CEO of JP Morgan is warning of an impending recession make us realize that talking about a crisis is no longer just speculation, it is now a fact. But although all this sounds worrying, we must understand that recessions occur regularly, and that we can see them in two ways. In the pessimistic way, thinking that everything is going to be worse, or in an intelligent way, taking advantage of this crisis as a real opportunity to obtain amazing results, discounts, and take advantage of the low prices in the market. Even one of the best investors in history, Warren Buffett, says that bad news is an investor's best friend. Now, to know what to do during the coming crisis is to understand what is supposed to happen over the course of the next few months of the recession. In general, recessions are accompanied by three important factors. The first is an increase in the unemployment rate and in the layoffs of personnel in large companies, as well as a drop in wages for workers, a distrust when buying for part of the consumer, and above all a significant drop in the shares of all types of companies. The crisis in first world countries infect the others of the rest of the world, especially the poorest countries. So the second factor that generally comes along with a recession is a decrease in profits for the vast majority of companies. Already we see as quarter after quarter companies report lower revenues, as well as lately they have been bracing for very slow growth or even losses, prompting a risk of an imminent recession at an alarming rate not seen for a while, more than 10 years. Which brings us to the third factor, the massive layoffs. When consumers have lower incomes, they tend to spend less, and when companies start to detect less demand, they tend to reduce their expenses, which inevitably ends in a reduction in personnel, and that means massive layoffs. The news is littered with articles exposing a large number of companies laying off their employees in a manner. Even one of the country's largest banking institutions has warned that the US economy will begin to see 175,000 job losses every month. Now, to understand how we can take this recessionary situation in our favor and generate money thanks to it, we have to take stocks into account. Since right now the three main indices have reported a drop of 20 and 30%, and well-known institutions like JP Morgan speculate that they can still go down as much as 20% more than current levels. However, if we take a step back in history and see how since 1946 the average market decline during times of crisis has been close to 30%. With the exception of the 2009 crisis, when the most recognized index in the country, the S&P 500, presented a fall of more than 50%. These two factors combined have given that the average fall during a recession is 34.8%. Now if we look at the behavior of the S&P 500 since the last year, we can see that the lowest point was presented in the month of October 2022 with an increasing trend to date, which could indicate that the worst moment of the recession has already passed, and we are in a moment of recovery. So it is believed that from now on the shares will only go up. For what if we invest now that the shares are below their usual price? We would surely report profits as they rise in value. Another way in which we could take advantage of this recession in our favor is with real estate. Because although each area of the country behaves differently in terms of property prices, it is very rare that housing prices drop more than 10%. As you can see, since the last 60 years, prices have not stopped growing, with the exception of rare occasions where price falls have been reported, as in the 2009 crisis. Now, a notice of the general consensus of Wall Street tells us that house prices across the country will fall by about 7% by the end of 2023, and could even go as low as 10 to 15% if interest rates continue to rise. Also, according to Moody's Analytics, the most vulnerable markets could experience a decline of more than 25% in some parts of Florida, Arizona, Idaho, and Southern California, and will continue to decline for approximately 12 to 18 months before bottoming out. So if you have the capital to buy a house now that prices are low, would be a great investment in the future, since real estate has always been and will be the safest investment that exists, and for which 90% of all millionaires have become rich thanks to real estate. Finally, another way to take advantage of this recession will be to keep cash. Because despite the general belief that cash is no longer useful due to inflation, but when the price of all other assets is falling, cash could be one of the safest ways to keep your money. Ray Dalio, a billionaire, admits that cash is no longer junk. Because in 2018, cash was the best performing asset. Cash is becoming such an important part of portfolios that even fund managers keep the largest amount of cash since 2001. This added to the imminent implementation of FedNow to the US economic system, which, in case you don't know what it is and how it works, I will leave you the link of the video where we explain it in detail. But in a few words, FedNow's goals is to remove cash from the market and exchange it for digital money. So this will make cash become a scarce commodity and increase its value significantly. Now, in terms of what you could do about it to make money and why many people do not take advantage of these types of opportunities, this is what you have to take into account. And it is that first, everything becomes less expensive. Because generally, where an average person sees a crisis, what a rich person sees is an incredible opportunity to invest and be able to buy exactly the same shares of companies with 30 or 40% discount. Secondly, if you are a small business owner, a recession could benefit you, as history has shown us that when times are tough, big companies shrink, withdraw, or even go bankrupt. So this makes way for small businesses that stand out and take their place. So contrary to what people think, this time is one of the best times to build wealth in the last 10 years. But what do you think? Do you think you could use any of these strategies to grow your wealth in this crisis? Let me know your opinion in the comments, and don't forget to subscribe if you like this type of content. See you next time.